Well, let's get more now in the day's trading session with Larry Shover, Chief Investment Officer at SFG Alternatives. Welcome, Larry. A lot of analysts still saying the markets have been responding in a relatively ho-hum manner. But with the Dow down now 11 days of the past 14, I have to say, it feels a bit like the roll down the hill before you plunge off a cliff.
Yeah, Maya, you're dead on. I mean, up until today, it seems like half the market was just in a standstill. You have some participants thinking they don't want to miss out on some resolution, rebound, rally. The other half are worried about a crisis sell-off, and so traders have been at a standstill. But when you consider the S&P 500 is down almost 4% from the high made in September, we have the VIX up a stunning 60% from August. We're starting to, the bias is shifting a little bit. We're taking on water, and people are starting to get a little bit more concerned.
Now, with the U.S. dollar down, you might expect a lot of investment flooding in from overseas, but do you think all the political shenanigans are spooking the overseas investors?
Yeah, no, they definitely are, because it has a profound impact all over the world. I mean, we could see like overshooting of the euro currency versus the dollar, the pound versus the dollar, those crosses that make sense. But I do use the word overshooting very intentionally, because I do think there might be some value in buying the dollar cross, especially against the pound, on any type of resolution. But yeah, there's an impact that's just could be tremendous.
Would you say now is also a good time for Australians to be hoarding greenbacks, given where the Aussie dollar is trading?
Boy, well, I've been dead wrong about the Aussie dollar for a while. I used to really love the currency and trade it, but boy, after that huge rally we saw in the Aussie a couple months ago, I'm just very perplexed. But it seems to me that Aussie's tied a lot more to China, tied more to base metals. I do believe it's undervalued long term, so I think Aussie should stay tight, being long Aussie dollars.
Yeah, you know, you mentioned China there, and I know that you think that growth will actually pick up, maybe go as high as 8.5% in the third quarter. But the IMF today just downgraded its forecast to 7.3%. What do you make of that?
Yeah, well, a big discrepancy. I think the calls are all over the map. But when you think of the PMIs, the factory output numbers, the fact that they're starting to work on these cluster cities, joining transportation centers, infrastructure, et cetera, I do believe short term they have a lot of propensity to grow, especially here in the third quarter. So I stand by my conviction of anything close to 8.5%, and that's going to be great. A shining star in the economy right now that's suffering with the problems here in the U.S.
All right, well, a lot remains to be seen there. Thank you so much, Larry, for joining us.